Namaskar. I welcome all of you to my YouTube channel Agri Business A Journey. Today I will discuss about another important chapter in macroeconomics, that is investment. When I am highlighting about the investment, it means it is the net addition of physical asset in a particular country. It is not in the line of financial asset. Only addition of the physical asset in the form of the buildings, roads, automobiles, real estate, these are called as the investment. Before describing about the investment, just I am highlighting some of the important point in this direction. You all know that from my previous video that income or whatever our disposable income is in our hand, its major proportion are going in the form of the consumption and rest are going in the form of the saving and investment. As income increases, consumption increases but not at the same rate. In the long run, whatever the saving we have, it's some percentage are going in the line of investment and rest will going in the form of the consumptions. So, if you thinking about the national income depends on two parameters. One is the propensity to consume or consumption and second is the inducement to invest or investment. When the consumption are connected with the investment, then definitely it will add employment in our country. When our employment scenario will be improved, then definitely our income generation will be increased, then subsequently we will find more and more consumption and the investment. As law says, in one part of the time, as income increases, propensity to consume remain constant, then definitely we can come to a conclusion that future income and employment mainly depends on inducement to invest or investment. It means in the long run, if you like to stabilize your economic parameter or macroeconomic parameters like employment and income, then definitely you thinking over the inducement of investment or investment. Then questions arises, who are the parameters or what are the factors that connect to the investment? If you like to increase the investment scenario of your country, then definitely you have to take two things into consideration. One is rate of interest and second is marginal efficiency of capital. In the short run, rate of interest is almost constant. So marginal efficiency of the capital decides whatever the scenario of income generation and employment of a particular country. But the problem arises, according to the rule, marginal efficiency of the capital or whatever the physical asset you have falls as investment increases. If it occurs, then question arises, why the marginal efficiency of a capital decreases as investment increases? It happens due to the two things. When your business environment or business ecosystem is quite good, then more and more players will come to a similar segment. When more and more players will coming to a similar segment, then supply will increase and that will be as increase the supply, then ultimately price will be reduced down. When your price will be reduced down, then definitely your cost of capital will be increased and it is not wise to thinking over more and more investment in the further directions. That is the cause. And second important one is that when your business scenario is quite good, then ultimately every physical asset starting from the machines to automobiles, every price of the product has been increased. Because many people will come, then ultimately demand of the physical asset will be increased, then ultimately its price has been increased. If the price of the particular product has been increased, then ultimately its aggregate demand going down and that will not be purchased by the consumer. So whatever the things, according to the rule, the marginal efficiency of the capital has been reduced down as our investment will be increased more and more in the long run basis. Suppose you have to stabilize your investment scenario or if you like to increase the efficiency of your marginal capital, then definitely you have to think about three directions. One, you have to increase your populations. It means you have to increase your demand throughout your country. Second, you are going for your geographical segmentation. Suppose your business are doing well in the southern part of your country, then definitely you are thinking about the northern sphere, western sphere and eastern part of your country as well. Geographical segmentation or the territorial expansion helps to increase your efficiency of the marginal capital. Third one is the technological progress. Normally, any product, if it is in a maturity life cycle, then if you incorporate some of the technological innovation in it, then ultimately it finds its highest degree of market across the country. It means if you are increase the demand through population growth, increase the demand through geographical segmentation or with the help of territory, then marginal efficiency of the capital that is reduced down in subsequent basis, it has been stabilized for some time. If your marginal efficiency of your capital, which is the indicator of future income generation and employment, has been stabilized, not be reduced down, then ultimately it increase the aggregate demand again. If it is increase the aggregate demand in future, then that leads to employment. Then ultimately that will increase the income generation, consumption, saving and investment. In a single statement, if your future scenario, if you like to change your income generation and employment, if you like to be strengthened throughout your country, then the marginal efficiency of the capital play a big role in this direction. So marginal efficiency of the capital should be thinking over how to increase the aggregate demand by controlling the aggregate supply. If our interest rate has been under control and our yield has been increased, either expansion of the market or widening of the market, then our capital, whatever the investment or whatever the capital we are thinking over, it finds its path to a better business environment or ecosystem. This is all about today's video of investment. Thank you for watching the video.